presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks, to the March 13th, the Wiener Schnitzel, wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. We've got you covered. Let those fingers do the walking. That means send me an email, steve@tfnn.com. In the subject heading, please put radio show question, and that leaves the Tiger's Den, where any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, markets are positive across the board. It is green and green. Leading the charge percentage-wise, the transport's up 1.5%. Behind them, the NASDAQ 100 having another nice day, just over 1%. That's up 73 points out there. All looks good. Looks like the move 2 days ago in the spot volatility index was, in fact, an initiation move out there. We'll talk about that if we remember to do that. We've got gold up 10, silver up 3 pennies. But let's go to our first caller, and that is Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
Doing fantastic, Steve. How about yourself?
Doing well. Thanks for asking. And what is it that you're calling about today, so I get that up on my screen?
I'd really appreciate if you could bring up the oil contract and just, I know we've been in this consolidation for a period of time now. It's been at least a couple of weeks. Haven't broken down, haven't broken up. I'm just wondering what level would be kind of confirmed, some kind of a breakout to the upside.
That's pretty easy to answer, believe it or not. Normally we don't get easy questions. Now, when I say it's easy to answer, what I'm referring to is, Brent, I have the daily time frame chart for the current contract for light sweet crude. That is April. And what we can see is that today, right now, it is trading just slightly, just by a hair, above the top of its weekly profile. That's 57.81. We're trading at 57.91. So if we just simply use profiles as a tool to help us identify support and resistance, which is what it does. When you close above resistance, and we are not at a close just yet, but if light sweet crude were to close above the top of that profile at 57.81, that would say, okay, price should move to higher levels. Now we'll take a look at where that might be. But if price does not close above 57.81, then a move back down to the bottom of the consolidation is possible. Now, when I say consolidation, you mentioned consolidation. The market profile is really what I was referring to, Brent, and that would be about the 55.23 level. Now, typically, you wait for something to bottom before you, of course, I don't want to put words in your mouth, before you take some action here. So give me a feel for what you're looking at from a light sweet crude standpoint. Let's say price does close over the top of the box of 57.81 today. Then what would be the next question? Or what would you do? What action would you take?
Well, I've actually been long oil from way back in when we hit the bottom in December. I just would like
there
to
you
see
go.
It make the next move up, and so that's what I was just kind of looking to see what potentially you're starting to get to that point where, where if it does hold this level, what's the next potential level that it could go to? It looks like you're in the process of answering my question.
Yeah. So, what I can do here. So, look, first I'll do a couple of things, Brent. One, I've still got the April contract on my screen, and it shows the weekly profiles, but we're really not going to use those. But to give an answer, that says 65.37. The reason why I just want to see if we come up with the same profile levels as I switch to my synthetic version of the contract, which does a better job of stitching together historical data to then provide us with, I believe, more realistic market profile levels. Now, maybe the same. No, so this is interesting. So if we do that, which I did, on its weekly time frame, the top of its box is 57.39. So 57.39 closing above that this week adds to your bullish or long position out there. Since the weekly's not going to provide me with information, we're going to switch over to the monthly, see what profiles show up here. And so this is also kind of interesting. So from a profile perspective, what price is trying to do right now is get back inside its monthly range out there. So this would say the counter trend rally would be over if price is unable to close above 58.75. The high so far is 58.08, at the end of March. But getting above that level, then that would bring in the 65.75 to 69.25 area into play. I'm going to go back, Brent, to the daily time frame chart and just do a quick wave count off of the low from December 24th out there. And the beauty here is that today's higher move would get to wave number 8. Wave number 8 doesn't exist in the old Chapman wave count out here, which is why we use that 7th wave move which is letter G on my chart, for where price might pull back. Well, it did that on a daily basis, but it really wasn't much of a pullback, was it? Referring to March 8th. I mean, not that big of a deal, and you have a nice little hammer candle out there. So from a wave count standpoint, there's nothing here that I see that says caution. And the daily chart would then say the next level, Brent, takes me back to the October 30th area, and that's a little green dashed line out there. That's a Tommy DeMark setup trend line. That's a resistance level, and I'm just trying to get what the high on that session was. On the high of October 30th was 68.33, and you're at 57.93 now. So that's what I see when I look at those charts. What questions do any of those charts and data they gave you, any questions that they posed to you?
That's very helpful, Steve. Do you do any kind of work with seasonality, especially with the oil, of course, going into spring and summertime? And logically, you would think there would be an increase in usage because of, more people driving and the such, but I didn't know if you had done anything to
I used to. I don't.
That area.
Yeah, I used to. I don't. And I've wanted to try to automate something. I believe the Thinkorswim application does some of that. Maybe Mr. Bill, if he's in the den, he'll post something I can refer back to it during the show. But I don't have anything that I can provide to you from a seasonal standpoint on light sweet crude.
Well, you've already provided enough, Steve. I really appreciate all your help. And
you bet.
Everything you provide is much appreciated. So just have a wonderful day. You take care.
You too, Brent. Thanks for calling. We'll be right back, folks.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up about 185 points right now. Let's go to our first question here by email. This comes in from Sat. And says, good afternoon, Steve. So good afternoon to you. Could you please look at Qualcomm? QCOM is the chart, or is the ticker symbol. So it says, can you look at Qualcomm daily charts and suggest an exit price? What are the resistance levels for this? So here's an interesting chart here. First, if we just begin by taking a look at several different trend lines out here, what you're going to notice is Qualcomm is above those trend line, so you're looking for an exit price out here. We can also see this gap to the downside on the trading session from November the 8th out there. So let's go take a look at that a bit further, and we'll switch over to our 3 time frame profiles. And what we will do is first, just as long as we're here, if we look at the monthly on the very right hand side, prices trading with inside its box, the range here 51.35 at the bottom, 73.71 up top. Prices above the weekly top of the box. So just like Brent and I looked at light sweet crude on a daily time frame, we just use these profiles because they assist us to identify, understand where buyers and sellers are. Once you've on something moving higher gotten past the sellers, well, then says you can continue moving higher. Well, continue moving higher to where? Let's go to the daily time frame. In the daily time frame chart, what we had also identified was this gap to the downside. And the gap to the downside occurred on the trading session of November the 8th, and 60.15 is the number. That level was only tested once. It was tested and rejected back on December the 3rd as price got into that area. It did it with about 17 million shares back then. The gap to the downside at 32 million shares. So, Sat, you're asking me where is the exit price? I would instead answer your question by saying that it looks to me like what Qualcomm is trying to do is make its way up to 60.15. I don't know how long it's going to take to do that, but your exit price would have to be, in this case here, close below support. And support really inside of Qualcomm would have to be the bottom of its current profile, 51.38. Yes, it's above the top, and old resistance should become new support. That's 53.39, so that would be something for you to consider. Now, I'm not saying that Qualcomm doesn't have anything to consider. to the upside, but also like today's move, slightly, it's well above this little blue dash line out on my chart, and that's another area of resistance, little hidden area of resistance, no more hidden because we're looking at it. We can see that it is potentially in wave number 7 out there. That's letter G on my chart. Simply letter G on my chart because the numbers are referring to those Tommy DeMark counts out there. Of course, I just added 1. I'm going to convert that from a number to a letter. So it's either in wave 1 or wave number 7 to the upside. Here, this says that another resistance level inside Qualcomm, hidden until you and I took a look at it on my charts, would be the high from January 15th. January 15th, that high, that price point is, drum roll please, 57.40 out there. Now, if price is able to close above that green line out there, that's a beautiful thing because it tells you about a change in trend that is underway inside of Qualcomm. So to best answer your question, potentially in wave number 7, you can see changes in trend there. If you were going to, you would look for price to pull back to Stevie's green line right now, 53.72. As long as price stays above that, you'd want to likely stay in the trade. But I have no idea where you're in or anything like that. But right now, I'm not seeing a real reason to exit Qualcomm. Take a look at the daily, weekly, and the monthly time frame. So thanks for writing in, and hope that helps answer your question. David G. writes in and says, hey, Steve. So, hey, David, are the weekly SPY Russell Diamonds, the other chart showing a DeMark 9 count out there? And thank you in advance. I guess that's what TIA had. Pretty smart. Am I on it or what? So let's go take a look and try to answer that question. So you were specifically asking about the weekly time frames. So let's take a look at the weekly. You specifically asked about the SPY. Let's put the SPY chart in here and see where we're at. So you already knew the answer to the question. You're just leading me on here. And so last week was bar number 8. Looks like this week will be bar number 9 out there, but it could be bar number 10. Or it could not be at all with regard to a move up. So the answer is yes, the SPY is showing that. You also mentioned the Russell 2000. Let's take a look at it on a weekly time frame. Well, I know I didn't like that because, I put in RUT. The heck am I? You put in SPY. It would be the IWM. So I just followed you. You're trying to fool me here. Now, the answer to your question with regard to the Russell 2000 is no. It formed that Tommy DeMark set up 8 count, or 9 count really. It did that a couple of weeks ago. Let me get the crosshair out here. And the crosshair shows that 8 count. Remember, when this count arrives, it can identify a change in trend, an impending change in trend that would occur with, in this case here with price movement higher, the high of bars number 8, 9, or 10. This case here was clearly bar number 8. Now, the pattern worked, and it worked in a couple of different ways. So this is kind of interesting, David, that you point this out to us. Is it worked because what price did was it came back to test a level of support out there, that little red horizontal line, and it has bounced off of that. So the Russell 2000 IWM is already generated that count. And then you asked about the Dow Diamond. So let's go take a look at it. And it shows last week was 8, but the week prior to that was a higher high, number 7. So Stevie doesn't look at week number 7 as being that high. I guess you can, but it's not what I use out there. So you got to have a little bit of a mixed bag here. Summarize in the SPY, yes, it looks like that. In the Russell 2000, no, that's already taken place. In the Dow Diamonds, well, it could be in that 9 count area, depending on where this week's close is, give you the 9 count, and that would have to be bar number 10. It would have to be next week's bar that would generate that high out there. So, David, thanks for writing in. Hope that helps answer your question. And we've got another question out here. Here's one from Alex. Alex writes in and says, hi, Steve, Alex. He is long the NQ via TQQQ. Is there a price to start taking profits? So you're long the ETF, but you're looking at the NQs, the futures contract, to assist you with that trade. So I should do the same thing that you're doing. I think you should. We should. Now, if we take a look at the NQs out here, and you didn't David didn't ask about the QQQ series, but as long as we're taking a look at a weekly chart out here, you can see this week is going to be bar number 9, or appears to be bar number 9, in that 9 count. Now, there's 3 things that can take place. It could be just a hiccup. Means like maybe like 1 bar sideways or so. It could be a sideways move, several moves sideways, or it can be a change in trend. I guess there's a 4th option. Well, the hiccup really covers the 4th option. The hiccup, meaning it just kind of moves sideways, no big deal, it just continues to blast through it. Now, the reason why each of these, or we, are paying attention to this is, if you were to ask me, Steve, when the NQ on a weekly basis made its high, what was its count? We'd come all the way back here on August 31st and say, well, it was count number 9, Count Dracula. Will it be the same this time too? Only time will tell. We'll be back to answer Alex's question right after this commercial. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, S&P up about 25, NASDAQ 100 up 73, and it's the NASDAQ 100 that we're really focused on right now, trying to help Nick here. Oh, shoot, that wasn't Nick's question. That was Alex's question. Somehow this thing jumped over to Nick's question. It doesn't matter. We're answering Alex's question with regard to the TQQQ. So let's go. And Nick is basing his decision on the underlying instrument as best as he can, being the equity futures contract, the NASDAQ equity futures contract. So that's what I have up on my screen here. I've got my synthetic version up on the screen, just simply so that it makes it easier for me to gather data. And in gathering that data, if we just take a look at just trend line. So if Nick was going to make decisions based upon simple trend line analysis, here's one of the things that he knows, and now you know, that took place yesterday. And that is going back to its all-time high from October of 2018. Just a simple trend line. You can draw these. And then the next touch point out here for this I would use as March the 4th. Well, we can see the high of March the 4th. We can see that price closed over that yesterday. Positive. If you look at a little rising trend line, short term, in nature, you could use the high of February 25th, and then we're back to March 4th out there using that. And we can see that we're trading just slightly above that as we speak right now. So what do these trend lines help us do? If you break through them, what they're saying is they've eliminated any kind of reason whatsoever, trend line-wise, for you to consider exiting a trade when something is moving higher. The next trend line out here today's be about 75.80 or 76. So that's what the trend line is showing us out here. Let's summarize this. The trend lines are not showing any reason at this stage, day's not over, to exit the NQ trade, regardless of the bar number 9 that looks like is going to form this week inside the NQ. If we take a look at our market profiles out here, we're also going to use our composite symbol so that we've got lots of data. Here what we can see is that price is above the weekly now. And the weekly was 72.41. You're at 73.05. So as long as price stays above this, you're copacetic. You're good. If we take a look at where's the next profile level out here, it's a good question. Shoot, can't do it right like that, can I? Let me do this here. Let me see. It may take a little while to populate. We're looking for some white bars out here. May have to move on. I don't know. Wait. It's not that I'm impatient, but a little impatient. We'll come back to that. So what else can we look at to help us identify where price is headed to? Oh, I know. I just come over here. Let's do this. There's a couple of things we can do. If we take a look at the NQ on Stevie's Ninja Trader charts, we can see that we are above. This is not giving you or I any signal of a top out here. So it says that it wants to move higher. So that's bullish. Can't get the monthly profiles up for some reason on this chart. I know it's just doing the calculation. Last but not least out here, let's go take a look at horizontal trading ranges. And as we take a look at the horizontal trading ranges, if anything is going to stop the NQ, it's sort of right here, right now, or maybe over the course of the next couple of days. So here's a population of horizontal lines, both daily. This is a daily chart. Daily, weekly, and monthly. Daily are blue. Weekly are green. Red are monthly levels out there. And you can see that it's 73.09, and our actual high today has been 73.13. We're trading at 73.05. That is a monthly horizontal trading range boundary line. So another level that you would be looking for price to close over, it does not have to be today, but if it was today, that would be a beautiful thing for you, is the price point of 73.09. A close above that, then what that does, Alex, is brings the 74.92 area into play as its next horizontal trading range target out there. So I hope that that helps answer your question. I don't see the reason to exit your trade, at least not at 1:34 in the afternoon. With these markets, anything can change. So Nicholas had written in, happy Walk Wednesday. Oh, I like we're trying to come up with W's for food. Brent came up with one. And, of course, somebody else said Prince Alberghetti Day. And, of course, that made a lot of sense. That's what we all typically think about on a Wednesday. And but no reason to not have a little Chinese food, a little walk out there. So I used to own a Chinese restaurant. I know it is hard to believe, but believe it. Made the most amazing, several amazing dishes out there. I'd say our egg rolls were probably the tastiest egg rolls I've ever had. I'm not just saying that because I can't say it was an old family recipe. It wasn't. It wasn't. But our secret ingredient inside our egg rolls was peanut butter. Yep, Good peanut butter, but peanut butter nonetheless. And oh, I can make a mean crab rangoon. And the sauce that goes with it. And some good char siu. Hey, yeah, you can sort of get a, am I making you hungry? But in any event, let's come back to Nicholas and his Happy Walk Wednesdays. Can you take a look at the Dow and DAX on a 60-minute? And Nick is the guy, he always likes those 5-minute charts out there. I hate looking at the Dow on a 5-minute chart, but he knows what what I really mean is we'll look at the Dow Equity Futures contract on a 5-minute basis. So here, we're taking a look at it. It made its high with a little tummy to mark setup 9 count. It did that at 1320. So 120 in the afternoon. You got a little resistance bar that looks like, I wouldn't know till 140, but looks like it's establishing itself at the high from 5 minutes ago. That was at 25,773. So you move above that, then you're heading to higher price support. On this happens to be the 1245 bar, and that low was 25,731. So that's what the 5-minute chart is telling you, telling me, telling us out here. You also wanted to take a look at the 60-minute time frame chart for it, and the 60-minute chart for the Dow looks like this. And when I say looks like this, you can see it ran right into resistance, as it should have, at that solid green line out there. That solid green line set up by that TD9 count. Oops, I don't want to do that. Instead, I wanted to do this. And that was set up by the session from a 60-minute time frame at 2 o'clock this morning. So that's when that began forming. And you can see that price here, as we came into the noon time, ran right there, right into resistance. Now, granted, it was prior highs out here because that high was at 2,300 hours last night. But nonetheless, it is that green solid line that's resistance. Now, you close above that. I think I gave you the price, but let me just make sure. We like to be thorough here. The price was 25,780. You close above 25,780 on an hourly basis, you're headed to higher price. Now, it could be a lot higher price because that'd be one whopper of A to B equals CD pattern to the upside. When you say whopper, I say whoppy. If we take a look at what that whopper of an A to B equals CD could be out here, what that looks like is priced of about 26,038. We're not there yet. You wouldn't get there until you close about 25,794 out here. So, Nick, that's what I see. I'm going to pass on the DAX chart out here. I won't pass on it totally, but just pass on it from the Ninja Trader standpoint, the 5-minute and hourly. But let's go take a look at the DAX out here. Let's just go see. Oh, we got like about 10 seconds. Let me put up the DAX. Where is it? Where's that DAX chart? For goodness sakes. What do we see? What do we see? I'll need more time to do some analysis on the DAX. I'll do that for our man Nick on Walk Wednesday. We're walking and rolling. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the chart on the screen out here is the DAX. This is for Nick. We're taking a look at some simple. So price here in the DAX is caught between support and resistance. And you can see the resistance line established by the high of September 27. Just simple trend line, so you can do this too. March 1st is the next touch point. You can use March 6th as the next touch point. Yesterday also was the next touch point out here. So there's your resistance. Price closes above that trend line, price should move higher out there. Ideally, to really bust out of that, you'd like to see it close above the March 6th high, 11,652.77. Yeah, I know that's not the shooting star from March 1st. Well, you'd like to see that too, 11,676. But price also has trend line support out here. And we can see how this morning the low in the DAX was testing that. That you can just simply use the low of February 8th, then the low from a few days ago on March 8th, and you can see how that is responding. So that's what I see when I take a look at the old DAXy one out there. Peter in Park City wants to go take a look at Goldilocks. If we do go take a look at gold and we do the same thing, just start off by take a look at some trend lines out here. Let's see what gold has to tell us. And the beauty here inside of gold was that we don't see, it broke through a trend line yesterday. Trading out at 1309, so that looks pretty good. This says, say, next time you might run into some trend line resistance in the 1330 area. So when we take a look at gold that way, that's what that tells us. But I know Peter wants to go take a look and see, hey, what's gold doing in the major currencies out here? So if we take a look at just stuck at the 1309-ish area, and at 1309, you've got the point of control, the center of the weekly profile, which is 1308.80 to be exact. Moving higher in euros, gold that is, moving higher in yen, and pretty much unchanged from yesterday, expressed in pound sterling out here. So the real key area, resistance, we knew it was there. We know that it's there. If price is able to close above 1308, then this says price ought to move up into the 1329 level. The question is, will it be able to do that? Well, you know, what else we have going on is several things. Here on a weekly time frame, Peter, if we take a look at the weekly time frame chart, we can see this little big old shooting star candle that formed out here a couple weeks ago. For price, what it did was it came back to test support. Remember when the red line turns green? What it tells us about is an ensuing, over a period of time, a retest of that line, Stevie's oscillator unchanged line. The bullish outcome is price pulls back and rejects that level. Now, we're not really worried about the emotion of the week, meaning the wicks of the candles. Instead, we're more interested in the body of the candle, the open and the close of that candle session. In this case here was a perfect bullish test. So, Peter, on a weekly basis, we have a rising price oscillator above zero with the test of Stevie's green line out here, and that looks pretty good. We know where the resistance is. It's from 2 weeks ago, the high out there. That's what the weekly time frame chart is showing. So, yes, we're up at a resistance zone. That's okay, just taking its time to get through there. If we look at the daily time frame chart, the daily time frame chart says, looks good. You're above the daily oscillator and change line. At 2 is green, so that's good. That means that it's shooting for that little blue dash line. That is from, I don't know what day. I'll tell you what day here in a moment, just a few days back. So the next move or resistance is at the 1316.50 level, and that's from March the 1st out there. But otherwise, not even otherwise, the daily chart looks pretty good. Weekly, we know it's up at a resistance zone, that market profile. And then the 5-hour time frame chart out here for you, the 5-hour chart looks muy bueno. It's in the process of completing. Well, here's the good news and the bad news. The good news is it's forming some type of A to B equals CD to the upside. 1311 is the 1-to-1 level. Price gets through that 1308.80, 1309 level. We're right at 1309. I don't think 1311 is the end of it. Could be, but I don't think so. I think you're looking more like 1323.77 before it really runs into some resistance out there, and could be that it forms a Gartley sell pattern. So we'll all have to be on the lookout. We'll see what gold is doing in all the major currencies. Should it continue to advance and get up towards that 1323 level. So, Peter, does that help you out with regard to gold, or is there anything else that I can provide to you? Because if you've got a question, I guarantee you somebody else has that same question. Now, no other questions that I see out here. So let's go take a look at that New York Stock Exchange Advanced Decline Oscillator reading and see what it's doing. And as we peek in on it at 1:47 in the afternoon, it's just slightly below zero, -9 and change out there. Positive, a potential positive, would be for it to close above zero and stay above zero come tomorrow, so that it would have follow through to the upside. Always dangerous, New York Stock Exchange, always dangerous when you get up towards the zero line on that advanced decline oscillator reading if we were to see some bearish action. I don't see any bearish action, really. When I take a look at intraday time frame charts, 30, 60, 120, 300, I don't see it out here, not yet. Maybe it exists and my eyes just can't see it, but I can't see it. We always have to be on guard out here. We should be on guard. And so we'll watch to see what the advanced decline line oscillator looks like at the end of the day session above zero. Then what you want to see is follow through tomorrow to the upside to then tell us that buyers are back in control inside of the New York Stock Exchange. And when we speak of follow through out here, I had mentioned it earlier, and what I was mentioning earlier was a couple of days ago in the New York Stock Exchange, what it gave us a one-day rate of change. This was on March the 11th of -10.72%. Anytime you get below -10% out there, it mostly is an initiation move to higher price. Well, we've seen that. Now, this is the S&P 500 on top. So here we can see the S&P 500 is approaching a potential resistance area too. Just a very short-term, simple trend line from February 25th, as well as the high on March the 4th. Again, not seeing anything on a short-term basis, but hey, we're up against some resistance areas up here that just need to be contended with. You close above that, the S&P 500, or even whether it's today or it's tomorrow, boy, an initiation message it was. Now, you'll see other green arrows on my chart there, most of which, not all, there's 3 or 4 of them that did not, but most of which led to higher price. But the ones that didn't, their pattern was not, 3 days later, it will, like a blow-off top, or 3 days later is when it turned out here. So everything really looks pretty good. Just curious, I imagine you're curious too, about the equal weighted ETFs out there. How are they doing in this cycle? So where did Stevie put that? Right here. Just curious before we go to break, what shows up? It shows up on the equal weight. Boy, equal weighted ETF for the Qs almost back to its all-time high. How about that for some power? Rhodes per PM.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we do have another question that came in. This one from the golf guy. Got to like the golf guy, especially this starting tomorrow. You got the TPC tournament up in Ponte Vedra. What a beautiful course that is to play. If you're a golfer, you got to put it on your bucket list to do. And course is in just gorgeous shape up there. But the golf guy wants to know about GPL, Great Panther Silver out here. And just wants me to, I guess, just take a look at it. So here's what we know about it. The bottom for Great Panther took place on November the 13th. As price was moving lower, with less relative energy out there, one of the Rhodes momentum indicator signals, you got that bullish reversal signal on November 15th. If we just do wave counts from that point in time, you can see that we're potentially in wave number 7, letter G, that is on my screen out here. So just something to be aware of. If we, I don't know where else the next place really would be to choose. Let's just turn that one off. No other signals that I see out here when I take a look at my Ninja charts with regard to Great Panther that it wants to do something different. If we look at the daily and the weekly, and the monthly time frame chart. So what we're going to see is that price is above resistance if resistance is the top of each of those profiles out here. So the question becomes, what else shows up on a chart that the golf guy needs to be aware of? And, you know, with the minute to win it, I don't know where that is out here. You certainly had a base that began building from about $1.11 up to about $1.45. So looks to me like a great Panther wants to try to make a run for that 145-ish area. So thanks for writing in, folks. Thanks for being here as always. Stay tuned. Your favorite polar bear, David White. He is the world's favorite polar bear. He's going to be up next. Tom O'Brien, 3 to 5, and Stevie Son here will be back with you on terrific Thursday. Take care. Have a great day.